quickly back now with another keynote of the topic is rise of blockchain, DeFi, cryptocurrency investing, especially for family offices perspective. It's a new emerging areas. Keynote by Alpesh Doshi, managing partner, Redcliffe Capital from UK. He is an entrepreneur providing advisory, building ventures in emerging tech and artificial intelligence. He is leading a talented multidisciplinary team. He builds ventures that leverage big data and analytics technologies, including crowdfunding, real estate, payments, using blockchain, sustainability, energy, travel, healthcare, financial services. Over to you, Alpesh. Go ahead.
Hi. Can everybody hear me, Rajan?
Yeah, sure. Everyone, I could hear.
They can hear me? Yeah? Cool. Hello, everybody. Thanks for joining my session. I'm going to just really do a brief conversation about blockchain and what's called decentralized finance. And also, think about very high level on education and what it is, and really talk about how this asset class and this I'm just trying to move my slide forward. Here you go. How this will change financial services in the future and where the opportunities are. And obviously there are a bunch of challenges and risks that are there. I'll talk about some of those and, really give you a picture of what I see as the future. I'm going to keep it very high level. So I'm not assuming that anybody knows about blockchain and decentralized finance. But if you have any questions, please put them on the question tab. Happy to answer them at the end, I think, just because we're running a bit later than it is. So the first thing I think I should do is just define what decentralized finance is. So most of you who are in the family office world will know what financial services is. You deal with wealth managers, investment banks, asset managers regularly. The whole decentralized finance bubble, if you call it, or market, is really nascent at the moment. It's looking at how financial services is going to change, really looking at the application of blockchain technology and what that's going to do to finance. Now, as I'm sure some of you know, financial services hasn't really changed in 300 years. Yes, it's been digitized. Yes, we've seen web. You can trade online, etc. But fundamentally, the structure of how the financial services industry works really hasn't changed. Where decentralized finance comes in is really taking existing financial products and migrating to what's called decentralized models. Now, the decentralized models really means the ability to remove middlemen, but it's not generally like that. The reality is middlemen are not going to get removed. A bank could be considered as a middleman, a wealth manager considered a middleman. But the reality is, in the future, these companies are the gateway into the decentralized finance world rather than the enemy of it. So this diagram here just shows you today really some of the companies. You don't really need to understand some of the companies. What's really more important is looking at the categories of service they're providing. So you can see in here, he's talking about liquidity and market making. He's talking about lending and saving. It's talking about payments. He's talking about insurance. He's talking about staking, which is very similar to stock borrowing and lending. So if you look at those things, these are all familiar terms in the traditional financial markets. These are not new terms. These are existing terms. And so what decentralized finance is doing is really reapplying this in a decentralized way with new technologies. And therefore also creating a lot more efficiency in the market by using the technology and being able to give opportunities to anybody to access those markets. And I'll talk a bit about that as we go forward. So, what are the real characteristics of decentralized finance? Effectively, it's recreating financial services. It's taking the existing models around any kind of trading, any kind of lending and borrowing, issuance of new securities, and turning it on its head and applying a digital end-to-end model and applying new technologies around how you establish contractual relationships between parties, how you establish how you actually conduct and find deals to work on, and how do you embed that infrastructure into the existing market. So one of the key things that, as an example, in the traditional financial markets is you have custody. You have custody of equity assets or other types of assets, and custodians, as I'm sure you know, the big ones like Northern Trust and Bank of New York Mellon and a bunch of these guys have been there in the traditional financial markets for 30, 40 years as institutional investors needed somebody to manage the back office part of any financial instrument that you may own. With decentralized finance, a lot of that stuff becomes automated and digitized and embedded in the product itself. So as an example, if you have a real estate asset, instead of having shares in a SPV, you create a token, and a token is just, if you're familiar with structured products, my definition of the simplified version of what a token is a structured product. But it goes more than that, in that it embeds the rules, embeds the way the payouts are made, embeds how, if things go wrong, how you do that, embeds the redemption. And the beauty is that you can trade that into the decentralized market. So there is no necessarily centralized exchange. It's a network of parties who are involved in that marketplace. So what it's doing is taking existing infrastructure and rebuilding it in a different way. So lending and borrowing is a really good one. Today in decentralized finance, and what I call the bubble of decentralized finance, there's a huge amount of lending going on of mostly today cryptocurrencies like Ethereum and Bitcoin. But what we're seeing is the advent of taking real assets, real estate, and putting those real estate assets to be able to be held as collateral to then use that to borrow money in the decentralized finance market. So that is a shift, right? That is a shift. You've got a real estate asset, you've got your debt and equity in the asset. Today, pretty much you can't really do a lot with it. With decentralized finance, you could take that asset, you can lodge it into the world of decentralized finance and borrow against that asset in the market. So you can lodge your asset, you can build what's called a smart contract, which is all digitized. You can take on the back of that and borrow money on the back of that and do whatever you want with it. So, you know, that is a shift in how lending and borrowing could work around real estate. One of the other elements to look at is asset transfer. You know, today, if you wanted to, I talk about real estate, if you wanted to buy and sell a real estate asset, there's a whole set of work which takes weeks or months on end to actually complete, with tokenizing the asset, creating what's called a digital token, a representation of that asset. You can effectively do the whole thing digitally, very, very fast, without all of the pain of doing that. Now, there's a whole bunch of issues, and I'm not going to deny the issues around legal ownership, around SPVs and how they work and how do you transfer those into shares. But I'm not going to go into the detail today. This is just an introduction, just to give you a flavor of what's happening in the marketplace. So some of the characteristics of DeFi are these things here. You know, in the purists world, people talk about no third parties. Effectively, anybody can go online right now, go into and buy a gateway, or not buy, use a gateway that gives you access to the market and start lending your real estate asset right now without any interference. You can create programmable assets. I mentioned real estate earlier, but you can create a programmable asset for anything. It could be, it could be the best baseball player in the New York Knicks. If it's a baseball team, I don't know. But the important thing is you could digitize that, you can offer that into the market, and if people like it, they could buy the income stream on that. One of the key things for me is potential anonymity. Now, anonymity is not complete. You know, you still have to go through AML KYC, because for me, the regulation and the governance still matters. But you can be more anonymous than you would be in other traditional markets. So therefore, you can lodge assets, you can be partially anonymous, and be able to do things with that cash. Now, one of the things that we're also seeing, which is very different, is it's community driven. So there's not like an investment bank or a wealth manager or whatever. It's the whole community. So in this world of family offices, what we can do as a community is participate in this decentralized finance world and do business without having to have third-party providers providing that capability. Now, that's a really important thing. As we're seeing, you know, family offices are moving towards not just dealing with wealth managers, asset managers, and others, but actually wanting to direct investment into anything. So therefore, being able to do that allows you to be able to use this kind of community-driven approach, allows you to do that. Now, obviously, you still need expertise, you still need tools, you still need to make sure the regular compliance works, etc. That doesn't change those things, but it allows you to have that community-driven approach that's difficult in the current market. So what's the opportunity, right? The opportunity is basically new types of assets you can invest in, will give you very good returns into the market. It's got to have regulatory oversight. I've been in financial services for 25 years. I don't believe in non-regulated stuff. You need to have the investors and the investees have proper regulatory oversight so that there is no criminal activity. It gives you better control of your assets than you do today. It also, you know, if you're looking at different asset classes across your portfolio, you know, you may have, say, 50% in listed markets, you may have some in bonds, you have some in wealth, in asset management. Think of this as another type of asset class where you could invest 1, 2, 3, 5% of your assets into that market, assuming that it's high risk. So I would say at this stage, it's more risky than venture capital, you know. So, you know, if you go at the most risky end, we're talking about VC, this is more risky than VC at this stage. So being able to invest, take the attitude that this is high risk, but it allows you to experimentation, it allows you to learn where the opportunities are. And as the decentralized finance market expands, you'll see more and more products and services, more and more opportunities emerge. And that's what we're seeing. The DeFi world represents themselves as market cap, as the Bitcoin does, as I'm sure you know, and the market has expanded significantly 3 to 4 to 5 times over the last year. So there's definitely a lot of adoption, there's definitely a lot of interest. But one of the key things for me is quantifying the risk. You know, you need to understand what the risks are of doing this. And the good thing is that a lot of the parties in the decentralized finance world provide the data for you to be able to understand those risks better. Now, I'm not saying you're going to understand them perfectly, because you can't do that in any market, but at least it helps you determine the kind of risks you're taking with your capital or with your real estate asset, for example. So what are the two big opportunities, right? One is making investments into new types of assets and new types of instruments. And the other one is being able to source investment and source capital through this mechanism as well. So that's just two big areas that you could do. You know, I know from dealing in real estate, most family offices and high net worths will have real estate. Number one, are always looking for new real estate assets. Number two, and they're also looking to finance deals themselves. So, you know, both sides are doable. Obviously, the way that they're implemented in this market is different, obviously, how that would work. But because of regulatory oversight and the reg changes, and, for example, the SEC really saying that you can now invest in these kinds of things and legally, we're going to see a lot of change in adoption over the next few years in the space. Now, I've been in the blockchain space since 2014, and we've seen the waves of this coming through. And I think now we're on a great path in this kind of in this new DeFi world, which will fundamentally, probably 10 years plus, change financial services. But there are lots of opportunities right now to effectively take the higher risk end of your assets and invest. Oops. Next slide. I'll go to the next slide. There we go. So what are the challenges and risks right now? It's still a nascent market. The purists and the people in this world are very positive. They're very are supportive, obviously, of the marketplace. But the reality is, it's a really nascent market. And because it's a nascent market, there are still lots of nuances and lots of risks. There's lots of issues. But there are lots of investment opportunities, and a lot of the returns are phenomenal right now. And there are also issues around the technology and some of the other things as well. So this is not a market that you go in saying it's the same market is there. The trust in DeFi is another big one. With the history of crypto and blockchain in the last few years, a large percentage of the world has become very skeptical about anything to do with this kind of stuff. And unfortunately, that's pushed back the legitimate and business benefits that this stuff provides. And that's to do with just bringing confidence into the market, showing all the different things around regulatory risk and other things to give confidence to people in the market that, look, this is not messing around. This is real. This is happening. And, everybody you go in it with your eyes open and you go in it step by step. One of the other big ones is lack of understanding. Yes, I talked earlier about debt and equity and loans and whatever, all those things people understand in the traditional markets. If you go into the DeFi market, there are a bunch of differences that you need to understand. And therefore, unless you can get past that or be comfortable about it, you won't invest, right? And so therefore, I think the DeFi market and the companies in that DeFi market, the ones that I showed on the first slide, need to be better at communicating. Now, to a certain extent, they're not that great at it. And the reality is a lot of the companies there, almost all of the companies, they're technology companies. They're building tech and they're offering services via tech. They're not really the best business communicators. And that's one of the challenges that's persisted over the last 6 years around crypto and blockchain. People who are techie get it. Most 99% of people are not techie. Like, what the hell is this stuff about? And so, for me, enabling that understanding will drive more people into the market. The fourth thing is hype. You've seen again in the last 3 months, 2 months, the rise of Bitcoin and, going from $19,000, $20,000 up to $40,000 and back down to $30,000. For me, that's hype, right? That's market greed and hype on speculation. I think that hype, if that hype went away, where people are talking about solid investments and solid returns and calculating risks, that will help. I'd rather have the hype gone and talking about these things in a considered way rather than looking at the hype. You see that Bitcoin went up by X%. It's like, oh, please don't talk about that way. There's so much other stuff out there. And I do believe, even though the hype's there, as I said earlier, this is the future of financial services. And I've been in financial services since the mid-90s. I can see the change. So what is the future? What's the future? The basic components to do this are in place. One of the big ones that we've seen is around stable coins. Don't worry about what stable coins are. If the important thing here is governments like China are issuing stable coins, which effectively are the digital representation of the physical currency. Now, to a certain extent, China is not really good case because large amounts of their economy run on digital payments anyway. If you go to China, you use Alipay and WeChat Pay to pay for stuff. You don't really have cash. Most other parts of the world, it's not really there. But we've seen over the last 5 or 6 years, countries looking at digital currencies and stable coins as a way of digitizing their currencies. Now, with COVID, we've seen that accelerated, and I think that will do that. Some of the other basic components are whether regulation is available, whether regulation is there around trading this stuff, whether the legal side, whether you have a digital asset, which is represented by a token, is legal in any particular country. That's a big challenge. I've seen it over the last few years. I've written a couple of books on it. I'm writing another one just about how these things are going to change. And so we're seeing a lot of those basic components in place. The technology side has been built. I have to say, one of the basic components is tech. I think the tech is done. And so the next part is when the traditional financial services industry enters the market. We've already seen Fidelity, JP Morgan, Goldman Sachs, although they don't probably say it publicly, all going into these markets. They're seeing the need, clients are asking for it, and they're now going into that market. And so we're seeing that obviously builds confidence, that brings assets into the market, that then drives more people come into the market and builds confidence, and we'll get a circular growth, obviously. And finally, adoption, right? It's all about adoption. If you can get large amounts of adoption, then that will grow significantly. And as I'm sure you know, millennials are absolutely on this. My son, who's 15, talks about this, and his friends talk about crypto to me. And we're seeing millennials really take it to heart. We've seen that it went up significantly and it disappeared. It's now coming back again. And I think that the adoption of these financial instruments, these technologies, and the infrastructure and the tools to do it, which a lot of which are already exist now, will drive adoption in the marketplace. So that's it, really. I mean, there's lots more to talk about, but there was 25 minutes. I wanted to keep it short. If you have any further questions, please put them on the questions section on the chat. We've got quite a few questions. So Greg's, hey Greg, thanks a lot for the question. It says continued or much faster short-term adoption as with, for instance, social media. So yeah, I mean, I think we're seeing growth in the DeFi market. We've seen significant growth. Significant meaning, from a small start to a slightly smaller, right? From $1 billion of assets in the DeFi world to 8-10 billion. I can't remember what the numbers are, but it's that kind of figure. So we're seeing that adoption. Again, the thing for me is DeFi is still complicated. It's too complicated for people. Having a simple application to do it is what people need. So Rajan is saying technology can accelerate social impact investing. Absolutely. Absolutely. This technology can do that. Absolutely. Greg's asking another question. He says, do you envisage a gradual change to the retail owners market being distributed by blockchain tokenized models? I see a lot of change. I mean, going back to what I said earlier about the skepticism and the hype and all of that stuff that happened earlier in 2017, that really damaged the industry significantly. We're seeing the adoptions of retail investors, which is great, but frankly, the big money isn't with retail investors. The big money is with institutional investors, and until they start putting it in, I think it's going to be a long way. And also, there have to be enough products. So retail investors need simplified products that they can buy, which are well quantified. And as I'm sure all of us know, in almost every single country, consumers are protected via regulation to make sure they don't get scammed. And at the moment, I think there's a lot of work to do to get the regulators to be able to say yes, we like this, and you can safely sell it to the consumer. Rajan, you're saying tokenization real estate is not taken off in a big way. Are family office support only REIT, or will tokenization be there in the future? I do believe real estate will be tokenized. I think it's just because the nature. So in some of the network that I have, there's a lot of real estate people, and they're always looking for new ways of finding investment or investing in products, and having the ability to take the capital tied up in their assets and do something with them. So that is a big benefit. If you can take the capital tied up in an asset and lodge the asset, for example, for using it for what's called stock lending. So in equities world, you call it stock lending. This is about effectively lodging the asset and as collateral and using what you get out of that to do trading or whatever. That stuff will happen. That is a nascent stage. When the real estate industry discovers it, when high net worth individuals and family offices and institutional investors discover this is safe, it will absolutely be really, really fast. Another question: when institutional investors when will institutional investors go big in crypto investment? Do family offices build confidence in investing in crypto? Yeah, absolutely. It's all about confidence. At the end of the day, you have to build confidence in the market. You have to have confidence in the safety of the capital. You have to enable companies and people and investors to understand the risks. And I think as that happens, I think that's when we'll get a lot better, a lot quicker adoption. So there you go. I think, let me just see if there's any more questions. 1 second. Cool. Yeah. So Thank you very much. I think that's it from me. If you have any more questions, you see my LinkedIn details there, my number. WhatsApp me on that, or just drop me a LinkedIn request and just put in the note where you found me, so that I know. Because as I'm sure you guys have, you get lots of LinkedIn requests from random people. So I always like to know where somebody saw me. Thank you very much, Roger.
Thank you, Alpesh. Very snapshot and very insightful. Look forward again. Thank you.
Thank you very much.
Thank you.
Thank you, everybody.